Hey, welcome back everyone to this week's update. Today I'm just going to give an update of my portfolio, kind of where everything stands and the distributions I've gotten this week, but also going over the market as a whole and yeah, just see where we're at. So before we dive in, the first thing is this disclaimer here. I'm not a financial advisor. Anything that I say shouldn't be taken as advice. I'm not a professional. This is all just for my personal experiment experience. Yeah, if you need financial advice, please seek a professional. Yeah, the overall market. Let's take a look at that quickly. I just put some random names in here. The Q's, Spy, Ulti, just for fun, the Google Roundhill, and then the Hood from YieldMax. Again, just to see, over the past 3 months here, how we really haven't moved. The SPY, S&P, and the Nasdaq, really, they're only up 1.73% in the past 3 months, which is, the max here. I think it got to looks like around 7% on the Nasdaq and 4% on SPY. S&P. So, there hasn't been a ton of movement really over the past 3 months. I think we all became kind of used to the market just continually going up. There's some pullbacks, whatever. There's one in April of this year, then there was another one in was it August? Pretty big dip, but those all got eaten up really quickly, and then we recovered and kind of moved on. But right now, it's feeling a little iffy because it seems like we keep testing all-time highs and keep pulling back. But if you look at the big picture, yeah, for the past 3 months, we haven't really done anything substantial. Now, what hurts that, as you can see from Ulti and even the Google, the Roundhill ETF there, the Google one was actually doing really well. We were up 22%, but now it's back down to only up 6% overall. And this is just the price change. This doesn't account for the total yield, so it doesn't take distributions into account, but just the price change of the ETF itself. And then you see the Hood has really suffered recently, really pulling back, and then Ulti, of course. And I thought Ulti in my last video, I mentioned Ulti looks like it kind of stabilized, but this week especially, it's dipped under all-time lows, so it's again back to all-time lows. I'm not sure what it's doing today, but I don't know. I'm not really interested in Ulti anymore anytime soon. Like I said, it seemed like when they're changing up their strategy, but it's kind of a horrible time to do that, or not a horrible time. It's good that they did that. The bad thing is that it's not going to immediately fix everything for them, especially when the market is going down in general. So, anyway, I just put that into perspective. If we look at year to date here, we can see, of course, Ulti is way down here, but year to date, the market is still up and doing fairly well. Like I said, back here in April, we had a pretty big dip and we were negative for a while, but it has still recovered and now it's just kind of leveling out. So what does the future bring? Your guess is as good as mine, but I don't know. I'm not completely freaking out right now because I know that this is healthy for the market, because continually going up is definitely not healthy. Um, so let's jump back to here. Again, the way I use a spreadsheet is I have a log here where I put all of my distributions that I receive, and this is the company or the ETF that's paying. This is the distribution amount total, and then this is because I do drip. This is the amount of shares that were purchased based on this, and that's automatic in my Schwab account. So I did have a conversation about that just this week about using drip and whether or not that's the best way to do this. Obviously, in these market pullbacks, it would be nice to have some cash from all of those distributions to be able to invest. Now, we don't ever know when the bottom is. That's really hard to predict, but it would be nice to use that money to buy things that have pulled back versus just automatically dripping it. Dripping is kind of lazy, but it is nice that it just kind of takes care of it, and you don't have to worry or stress about what am I going to buy and am I buying it at the right time. And at least you're reinvesting it. So I don't mind drip for now, but I might change that in the future. Anyway, so all of this rolls up to this sheet here, which, as you can see over this area here, um, all of these are the distributions that I've received over time. You can see we're coming to the end of the year here. Got coming tomorrow, I believe, all of my or the rest of my weekly distributions will come there. If we scroll down here, this is a graph of my weekly distributions that I've received. And here's my monthly. October was a great month. It was a big month, like I said before. November was pretty good, but it was a shorter one. There was only 4 total weeks in November, and then December is looking pretty good too. Hopefully, we'll pass this, but the distributions are down this month. Now, the thing about income investing like this, if we look at my overall portfolio, I'm down 1.7%. And I started this at the end of September. So really, in about 2 months, a little over 2 months, the overall is down 1.7%. And it's like, okay, well, and during that same time period, the S&P is up 3%. So you'd say, well, you'd be better off investing just in S&P like the SPY, which is true. Overall, I would, but the idea is at some point I want to do this to use the income to live off of. Right now, I'm not going to do that, or I don't need to do that. Um, but even in this time frame, I've received $3,000 in dividends off this $30,000 portfolio. Um, and even though the market change has been $3,500 in the negative, um, I I still have received $3,000 in dividends. So if I needed to use that money to live off of, I could. And again, this is unrealized market change. I haven't sold. I've only sold a couple things, Alti and I think Coney. But other than that, these are all unrealized. So, if you look up here, there's quite a bit of total return that are still green. LFGY is still negative, and BTCI because Bitcoin is still really struggling. Um, Anyway, like I was saying, the whole point of income investing though is you get income. So on such a small investment like $30,000, I'm still getting, well, I got $3,000. I'm still getting roughly $1,000 a month that I could use. Now, obviously, taxes and all of that, but it's nice to have that even though the market is going down. If I were just invested in stocks, for example, and I had $30,000 invested in Nvidia and Apple and all of those, I would have to be selling some of those shares each month to then kind of get me income, um, which obviously is more work, but it's also it doesn't help the portfolio kind of grow that way. Anyway, it's just I think I'm not saying there's anything wrong with growth investing like that, but it's one of the things that intrigues me more about income investing is I'm getting all these distributions each and every week. So then I can, like I was talking about, do I drip them? Do I choose myself what to reinvest into this portfolio, or how do I use that? So yeah, so overall, yeah, I'm okay with this. Like I said, down 1.7%. It's like overall, that's fine. This is, like I said, an experiment, so I'm just trying to see before I go putting in more money into this strategy, income investing. I'm just going to see, how it plays out. So that's my update for the week. I will next week is Christmas, so I'm not sure if I'll get on another video. I'd like to. Again, I'm just trying to share my journey with everyone, and get feedback of things that I'm doing that you like and things that you don't like, and ideas, so that we can all kind of help each other grow and improve. So yeah, thanks for watching, and talk to you later.